Good day to one and all. This is Dr. Sivaraman of iknowindustries.com. Today we are on 28th of July. I'll be giving the forecast for this particular week starting from 27th yesterday till Friday 31st of July. So this is the last week of the month of July. The market is known to make the month-end trend reversal moves. So we'll try to find out how exactly they are expected to make the moves during this particular week, the monthly trend reversal time. Besides, I will also talk to you about the market reading, how exactly we can note down the initial lows and the highs and try to compare it from time to time during the day and identify what is the intention of the player. Then finally, I'll also touch upon the trading strategy, what we need to use in order to consistently earn money from that of the market. So mere forecast alone is not going to help anybody to make consistently money. It might come true, but you need to understand that the fine-tuning of the forecast and exactly entering into the right level in the market is a real challenge for that of the traders. So as I explained that the quick moves or false moves in the market, during such quick moves, you need to commit the positions. But it is a normal tendency of a trader to commit a position and then pray to God and look into various type of analysis to find whether the market will move in line with that of the expectations. Instead, if you could calmly wait and do all your analysis, whatever you want, and wait for such quick moves are known to happen during the early and the late sessions. At that time, if you could commit the positions, then the probability of earning more money would happen. So simply committing a position just because you are a trader, just because you have got the urge to trade, then your patience will be tested. If your patience is tested, then obviously your mind might be strong enough, but they may not be such a huge one to keep you calm. So once the equity erode when the market moves against, immediately you go in for cutting the position or just close it with a loss. So this is what happens in the market. So the market fear comes to that of the trader when the equity is less, and very less equity, more the market fear. More the equity, and if you commit more position and bigger market fear. So the market fear is in relation to that of the equity. So if you got a larger equity and less position, the fear will be minimal. So that we need to understand. Then you will be able to really hold the position and earn money. Instead of simply holding the position and earning the money, I want you people to follow certain strategies so that you'll be able to really make quick money from that other market. So let us look into that of the forecast part of it. So this week, 27th to 31st of July, is the last week of July. The month-end trend reversal is expected to happen. So the market is expected to show volatile moves. And you will come across more of an upward bias. And quick upward moves are expected to happen. And then you might come across sudden drops also in the market. That will be mainly to induce the long holders. Once the market goes up, the traders become bullish and try to commit long positions. After that, the players need to drop the market, hit the stops before making further rise. And during that of the month-end time and the month beginning time, the players need to handle the options and the futures market, where in the derivative market, a lot of traders commit positions with the least premium. So in the options and the futures market, and there is more leveraged trades. So there you can commit a position and hold it and try to book profit whenever it is in the money. Otherwise, you can simply wait until they are closed automatically. In the futures market, you can pump in more money in order to hold it. And that is the difference. But in the options market, you cannot pump in the money. You will be simply holding the position. It's highly leveraged. And once the market goes against, and once the money what you have paid is just absorbed by the position, when it is not in the money, then automatically the option expires with a loss. And whatever you have paid initially goes off, evaporates. So that is what happens. So the players, what they do is they make the whips or moves during that of the month end and the new month beginning time in order to earn money from that of such traders. So they don't spare any trader for that matter. Wherever the money is being bet speculatively, they try to hit the stops and they try to bring in expiry with a loss, and then they earn as much as possible. In the process, the traders who trade along with it of the players will be able to earn money. But the traders who think that the market is moving in tandem with it of the fundamentals and technicals tend to lose money. They may earn about 2-3 trades successfully and lose in 2-3 trades. As a result, you'll find there may not be any progress in such trades. And probably some may claim that they have about 70% success, 60% success, and things like that. Still, it is a question of timing when you are going to commit the positions. So if you don't understand the market timing, then you simply go with it of the price action, then you tend to lose your patience. So you need to understand the session timings, and they are all given in GMT time because the market follows the GMT time to 24 hours global cycle. So here the early Japanese session is 0030 to 7 GMT. European session is 7:30 to 13 GMT. Then the US session is 13:30 to 20:30. In between the session, you come across 30 minutes of gap, and here again 30 minutes of gap. Between the US session and the next day Japanese session, there is a gap of 4 hours. So during the gap hours, the bank big orders do not pour into that of the market, so the players try to do the stop-ins during that time. And during that of the session, there are early and the late sessions. I will explain it with the help of another slide. Sessions. So the early and the late sessions, they will try to make the moves in the market, the majors, that is Euro GBP, USD Yen, and USD CHF, and also the commodity pairs, namely USD CAD and Australian dollar. During the mid sessions, they handle the yen crosses, commodity crosses, European crosses, etc. So early and the late sessions, they handle the majors, and during that of the mid sessions, they handle the crosses. So first 1.5 hours from start of the session is early session, and 1.5 hours towards close of the session is the late session. Then in between that is the mid session. So if you understand, and if you want to trade in the case of majors, then if you take the positions during the early session and close it during that of the late session pullback, then you'll be able to really make profit. Instead, simply during the mid session, if you take the position and when they make a downward stop and you become afraid, and later on they make a false move during that of the gap time, then there again you become more afraid because they continue to cut the low and pretend as if it is going to be a free fall. Then later on from early session, what they do is they may just make a small volatile move. Then that gives more nervousness for you. And also the news comes out that the market might fall further because all are waiting for the Greece outcome. So immediately what you do is, it is very risky to hold the position and close the position. Later on, see that the market started gaining the levels. So ultimately what happens is you have a right perception, right reading of the market, but you have not chosen the right time. You have chosen the mid session just like that because the candle has been formed, you have taken the position. Without understanding that the early and the late sessions, they handle the majors. During the gap time, they make the false move. And the next early session onwards, They just make a brief swing, and then from that time onwards, they might gain or drop depending upon the forecast. So you have to understand the forecast is given for the early and the late session. So early and the late session. So swing and rise mean they will make a small upward and the downward swing. After 30 minutes, they will not cut the low and start slowly gaining the level. Mid-session, some currencies they may gain, some currencies they may lose in order to handle the crosses. At the time, you should not think that, oh, I could have taken a position in euro and GBP is not at all moving upward, and instead I had taken a position in GBP. You might get confused like that. And later on in the late session, you will find both euro and GBP start gaining. So if you understand that what currency you have to bet and when you have to enter, when you have to exit, then you will find 100% of the trades you will be able to make profit. And simply hold the position during that of the mid-session, hold the position during that of the gap time, create the fear for you. So keep that in mind. Also keep in mind that the pairs which have made more than 40 pips spread between the high and the low are being triggered by that of the players to make big moves. The other currencies may not make such relevant big moves. So you have to commit a position in a currency wherein the spread between the initial high and the spread between the high and the low are more than 40 pips. Then you find that such currencies really give you quick profit. So if you enter during that of the early session, you can close it during that of the late session. Otherwise, you can enter during the start of the late session and close it by end of the late session, still you make money. Similarly, when they make a false move on the upside for 10 minutes during the gap time, if you take an entry and by end of the gap time, they make a dip, and early session, they make an opposite move on the downside. If you book profit in first 30 minutes, you make good money. Then again, after watching for up to 8 GMT, then they don't breach the low for more than 30 minutes from 7:30 to 8 GMT. Then take a buy position. And the focus also says they are going to rise. Then wait till end of the late session and you will be able to maximize the profit. So this is how, if you time it, your trade, I can assure you, you will get 100% profit in all your trades. So understand that I have given the forecast and it has to be followed following the timings given here. And some people think that, okay, one day you give swing and slide, one other day you give swing and rise. And what is refers to, if you show a disinterested approach to any study for that matter, you will not be able to grasp the essence of it. So swing means an up and down move, either near that of the high or near that of the low, without breaching the high or the low. So that is what the swing refers to. Then afterwards, they are expected to make the slide. That means they are expected to come down from that of the high to low. So they make the high level swing and then slowly come down. Here, swing and rise mean they make the lower level swing and slowly gain the level. Yesterday, you would have noticed that from that of the European session, they started gaining the level in the case of Euro, and then subsequently they gained the level in the case of GBP during that of the US session. So that is how alternatively they gained the levels. Why? Because they wanted to gain the levels in the case of Euro GBP cross. So once hold GBP and rise Euro, then what happens? Euro GBP cross goes up. And you know that Euro GBP cross, when it was around 0.69, I was telling you that they are going to gain it considerably from those levels. They already gained it to the of 0.71. So the timing of your understanding, if it is perfect, then nobody can stop you from making money from that of the market. Then today is 28th of July. They are expected to make the swing during the early session and slide during the late session in the case of Euro and GBP. Then a lower level swing and then rise during the European session. Then again higher level swing and a slide towards close during the US session. So either way moves they are expected to make it today. And tomorrow they are expected to make the swing and rise move. After the slide, they are expected to make the swing and rise or a firm up. And then suddenly tomorrow European session, they are expected to make a drop and then firm up after the dropped level. Then they are expected to make the swing and slide on 30th, because closer to the month end, they will induce the long holders to liquidate the long positions and swing and drop. So after gaining the levels for 3 days, 2 days, and then they will slowly drop Euro and GBP, and as a result, you will find that those who are holding long positions will try to liquidate the long position. Then they firm up little bit on last day and make a small brief sideways move on Friday during European session, started gaining the levels for month end. So Thursday, they will try to drop and induce the long holders to liquidate. So your trade could be sell and buy. Then Friday, they are expected to make the lower level swing. From there, start gaining the level. It can be a buy and sell trade. If you could plan your trade based on the forecast, then you will find that it is really rewarding. Besides, before entering it, as I told you, that either the early or the late sessions, you can go in for the swing trades. And especially during that of the last week and the first week of the month, you cannot do position trade. You have to enter and exit of the positions as quickly as possible, because they will suddenly reverse the market and you might get caught, and the position might be in the money and you will be happy that you have seen about 100 pips profit, and the next day you wake up and see it might be in loss. So do not lose such great opportunities during that of the trend reversal time. During trend reversal time, they gain quickly the levels. In the case of Euro yesterday, they gained about 120 pips. Grab the profit, because afterwards they are expected to make the slide. So that is how they make quick moves in the market during that of the trend reversal time. So during monthly trend reversal time, do not go in for position trade. So I am emphasizing again and again with regard to the market timings, not the levels. In my talk, you would have noticed that all the time I have been mentioning about the market timings. If you follow the timing sincerely, you will see that 100% success in your trades. But instead, you only follow the levels and simply take this forecast, and you find that, okay, the forecast is working, sometimes it is not working, and that is how you get that impression. So ultimately, you need to understand it is a new approach to that of the market, reading the intentions of the players. So reading the intentions of the players refer to, the players are the one, they are manipulating the market on the upside, on the downside, depending upon the traders' open positions. So they continue to gain the level. If the traders cut short, close their short positions, and then they turn long, then the players drop. After knowing the inside information, they drop the market. And then what happens? Those who have taken the higher level long position liquidate and turn short in order to earn back the lost money, technically seeing that euro could go below parity. So that is how they get that impression. And once they make a quick drop of 100 pips, immediately they think that it can go further deep. Then they take the sell position. The players absorb all the sells, start gaining the level. So they create the market sentiment, act against it of the traders. You have to understand that first. Then secondly, the levels are not important in the market, because you buy at 1.1083 and close it at 1.1129. you make about 40 pips profit. Otherwise, you buy it at parity and book profit at 1.0040, you make profit of 30 pips. So ultimately, that 30 pips matters much. If we give more importance to that of the levels, because in the technical analysis, there is only importance given to that of the levels and no timings, because there is no yardstick available to study the timings in the market. And if you ask anybody what are the timings to be followed, they'll simply say you can follow 30 minutes chart or 4 hours chart and 1 hour chart, like that. And that is not timing. The timing is when exactly you have to enter into the market, when exactly you have to exit out of the positions. So these things, if you understand, then you will be able to make money. But many people are restless. In the restless condition, whatever is being taught, it is not being absorbed. They want the food to be prepared and given it in their hand like a spoon feeding, and they can only eat. Then what happens? They immediately ask, if I follow the forecast, will I be able to get consistent earning? That is what there is a question from a newcomer which has been asked in the question answer window, that if I follow that code page alone, will I be able to make money? It is not like that. So this is a forecast based on an algorithm which gives an overall picture how exactly the market is expected to make move. But you have to fine tune the forecast into every 30 minutes move by reading the intentions of the player, because intention of the player can change from time to time. Why it can change from time to time? Because the players, if they suddenly see all traders have turned long, they will drop. So that we have to find out with the help of the type of moves they are doing in the market. So that is why we read the type of moves they are making in the market, and that I explain it with the help of tracking the forex market together webinar. So ultimately, I want you people to understand how it has to be used. Then you will find the forecast is really meaningful and it is priceless. Then these are all the levels in which the currencies are expected to make the moves in this particular week. And so we could come across, could come down a little more and also little higher side. And JBB is expected to consolidate here and slowly gain the level in order to drop GBP again. Then USDN is expected to come down a little bit, and then later on it will go up. Then USD is also expected to come down nominally and start gaining more levels. And USD CAD, after making the higher level consolidation with the upward stop, and they will try to hit all the stops above that of 1.31 during this monthly trend reversal, because they know very well in the forward cover, a lot of people would have taken the positions, and they will try to see that such positions are expired, and then later with a loss, and later on they will drop USD CAD. Then Australian dollar also, they are expected to consolidate near that of the low, start gaining the levels. So when you come to that of the market reading, we have to note down the initial lows and the highs around 3:30 GMT and try to compare it with the current market conditions. So current market condition is seen in the live market code page. This is the current level. So you find the initial low as 1.1081. What is shown here is of yesterday. The code page has not updated it. Here, the highs and the lows. They purposely do it so that the traders get distracted. Then you have to note down with the help of the platform and also other code pages. And the high was 1.1099. And so currently they are not breached the high or the low, and they are holding it closer to the low position. Then in the case of GBP, 1.5554 is the low, 1.5572 is the high. They just breached the high and going up. So if you watch carefully, you find yesterday they gained levels in the case of Euro in order to gain level in the case of Euro GBP cross. and today they are making a contrarian move. Euro is negative net change and GBP is in positive net change. So that means they will slowly gain the level. So yesterday, when people have seen that GBP is not gaining, whereas Euro is gaining, they will think that GBP is not having strength, only Euro is having strength. Then today they will say, how all of a sudden GBP is gaining strength, whereas Euro is not having strength, without understanding why the players have done it like that. So the players are doing it mainly as an alternative move. Gain the levels in the case of Euro and GBP, induce all short covering, and then drop Euro GBP by gaining GBP, the denominator, and the Euro, the numerator, on the downside. Then automatically you find Euro GBP cross comes down. So it is a regular way of doing it, alternative moves in the market. So we need to understand the sentiment created yesterday is not valid today. That we need to understand. The sentiment created yesterday is not valid today. Today they create a new sentiment and trap the new way. So that if you keep it in mind, then you will be able to choose the right currency. Then in the case of USD yen, 123.08 is the low, 123.49. They just breached the high and gone above. So you find that GBP as well as USD yen are gaining the levels. So what is the target? They wanted to gain the levels in the case of GBP yen. So they will gain more levels in the case of GBP yen today by making a contrarian move. Identify the pair, which pair has to be chosen for trading. So in that pair, if they continue to make the contrarian move, then they make a dip and stop cutting the new low, you try to take a buy. Then they will continue to gain the levels. Thereby, they are able to handle Euro GBP cross and USD GBP yen cross. Both the currencies they are able to handle at a given time. So these two currencies you have to identify and take positions. So that is possible only if you look into that of the live market code page. If you look into that of the individual charts, you will not be able to understand. One currency might show a bullish trend, another currency may show bearish trend, and you will be giving fundamental attribute like, no, China is like that, because of that, Euro is not going, or GBP is not going, Australian dollar is not going. You will simply give all attributes and not focus on the trade. So ultimately, you have to find out which currency has to be chosen. And for that, the economic conditions of the country are not going to help you. Now, in the case of CHF, the initial low is 0.9606 and the high is 0.9628. And they are not breached the low, the high. That means they are making subdued moves in the case of Euro as well as USD CHF at the moment. But both are showing negative net change. So that means Euro CHF, they are making a drop. Euro CHF, they are making a drop. A nominal drop, because the net changes are very nominal. So a nominal drop, once they stop cutting the new low in the case of Euro, new low in the case of CHF, new low in the case of Euro CHF, you try to take a buy, you will be able to see the profit. So this is how you have to choose the currency. Then in the case of Canadian dollar, 1.3020 is the high, 1.3043 is the high. So the low they have breached and going below that. So they are holding below that of the initial low. They are expected to make further downward move. In the case of Australian dollar, the low is 72.57, the high is 73.10. They breached the high and staying above that of the high. Now they are handling the commodity crosses to start with, because the commodities are already making a distinct move of breaching the initial high and staying above in the case of Australian dollar, and breaching the low and staying below that of the initial low for more than 30 minutes in the case of USD CAD. So they are expected to handle the commodity crosses to start with, and also the commodity pairs. So these commodity pairs, if you try to take a sell in the case of Canadian dollar and buy in the case of Australian dollar, keep about 5 pips away from the market. Suppose 1.3006. I mean 1.3015, you keep a sell order and see whether it is filled. If it is not filled, you take market sell position. Similarly here, a buy position, a buy order 0.7310 and see whether it is getting filled. If it is not filled for 30 minutes, you just grab it at the market and keep 30 pips hedge order. There comes the importance of trading. Because, see, we read so much in the market, but suddenly you may come across all traders would have committed a similar line of positions. So all would have turned long. So what the players do, they just make one downward dip before making a rise. So that downward dip is a false quick move. And in that case, when it makes a dip, as I told you, it might be a mid-session or a gap time. You won't be knowing. If since you are not following the timing, then you think that market is going against you, close the position. Instead, you take the position during the early session and later on keep 30 pips hedge order to limit the risk. And if it is hedged and the hedging is not making profit for 10 to 30 minutes, close it with a nominal loss and keep another hedge order, and you will find the market moves in tandem with your expectations. And if the position is not hedged and the position is making 25 pips profit, keep stop at entry and remove the hedge order. So there is no requirement of hedging order thereafter, because you have got to stop at entry. In the event if the market goes against, your position will be closed without any loss, and you can always take another position because there is no equity loss. So first of all, you have to prevent the loss. Then secondly, you have to earn money from that other market, because many of the traders have got the feel, no, I can withstand the loss of $3,000. So let me take the risk like that. So it is not the question of tolerating their loss or the appetite to accept loss. That is not the right approach for trading. Because in the trading, you should try to do the trades in such a way that I cannot accept a loss of 20, 30 pips. I can only accept a loss of 1 or 2 pips. If you have the mindset, then you will also carefully handle the position and also take very less position. If you take very less position and use the hedging order to limit the risk, and also try to keep stop at entry once the position makes profit. In the event if it is hedged, handle the hedge after watching for 10 to 30 minutes whether the hedging is making profit or loss. If the hedging is consistently making loss, you close it with 2-3 pips loss and keep another hedge order to limit the risk. You'll find the going will be good. You might lose about 2-3 pips loss, but at the end of the trade, you might be earning about 40-50 pips profit. So in the 40-50 pips profit, if 2-3 pips loss is subtracted, you end up with making about 40-45 pips net profit in the trade. So that is how you should calculate. If you do the estimate of that nature, then you will find that trading gives a real reward, and also market rewards patience. So you need to have the patience, and you need to see that you are entering at the market only during the early or the late sessions, if it is a major. If you want to enter in the case of crosses, you have to wait for the mid sessions to enter. Then Japanese mid session, take a position. European mid session, close the position. That way you will be able to really make money in the case of crosses. So this market timing, I explained it. So let me answer to the questions which are asked here. So Michael asked the question, I had just gone through that of the 10th anniversary series. And so the series of 10 webinars, so that you will be able to get an insight or understanding of my trading system or how exactly I approach to the other market. But he has asked another question. just focus on the learning to read the market through that of the live market code page. You have to perfect it. Perfect the reading of live market code page. Then you need not pay attention to that of the candlesticks or charts or fundamentals. And fundamental data release time, we note it as the market trigger time. And always before that of the data release, they will make a false move. And that means if they want to rise after the data hero, then they will make a dip before the data release. So 12:30 is the data release time. 12:25 to 12:30, they'll make a dip. Understand they wanted to start the market after, rise the market after the data. So you grab the position at that time, buy position, because they make a downward stop and or if move closer to that of the low and buy, then immediately after the data, they will spike up. You can quickly book profit. Use the hedging to limit the risk. Aditya, how do you differentiate the slide and drop, rise and firm up? That I explained it in my trading system webinar, the 10th, 2010. I have given it in FX Street. And kindly go through that, sir. The slide is a slow, about 25 to 30 pips or 35 pips drop or downward move, whereas a drop is about 60, 65 pips downward move. And similarly, firm up is about 25 to 35 pips on the upside. Then rise is about 65 pips on the upside. That's how they are differentiated. In order to give a qualitative variation, I'm using these terminologies. Because we have to, otherwise I have to say that simply it will gain about 60 pips and then drop about 30 pips and like that. Instead, I'm giving you that qualitative expressions of it. Aditya, is a webinar recorded because the recording on the schedule page is not updated? Yeah, it is being recorded. Once it is recorded, after about 2-3 hours, it will be updated in the website. And yesterday I was not in a position to present the webinar. That is why today I am presenting it for this week. Otherwise, every Monday you'll come across the Asian session live market analysis webinar will be recorded and displayed in FX Street under the webinar page. Then you will be able to get the details for the entire week. And Yazu, can you discuss Aussie? Do you see I'm sorry for the noise. Neighborhood, they are doing it. Do you see more slide? Crosses like Euro Easy have risen 600 pips in a few days. Do you see more rise? See, whenever you go to that of the crosses, as I told you, that they make the contrarian move. They gain the levels in the case of Aussie and drop, gain the levels in the case of Euro and drop Australian dollar, similar to that of what you have seen now, that they gain the levels in the case of GBP and drop in the case of Euro. So it will have the double edge effect. That is why you come across such big moves. So you should be able to differentiate and then try to take. You should not become stunned by seeing 600 pips rise or 600 pips drop. Then you are not fit for trading because you become emotional after seeing the price action. Once you see the price action and become stunned, you do not know whether to buy and do a buy and sell trade or a sell and buy trade. That should not be the criteria. And if you try to become like that, again and again, you will make a wrong entry. After the gain, you will try to buy. After the drop, you will try to sell. So avoid it. My humble suggestion will be, if you are not able to understand the moves of the crosses, better focus your trades on the majors, because there you will have the volatility on either side, and whether you have a buy position or a sell position, you wait for a day or two, you'll be able to book profit on either of the positions. Whereas in the case of crosses, they make one-sided moves, and if you're on the wrong side, you'll be trapped vulnerably if you try to trade without stop. Because I'm able to understand when you talk about 600 pip, that means you are trying to trade without stop. And money. Can I use market timings along with charts to coincide the level. You try to find out whether it is working or not, and then later on you will just drop that idea. If I say, you may not be able to willing to accept it. Fine. You try to correlate, then understand that that sort of study does not help you. The expected range is for 27th to 31st only, not, I think, might be a typographical error. I sent an email last week. Awesome. Your website regarding it. Okay, I'll reply and see that, because I am not sure whether I received an email from you, because I remember that I have not received any email as Murad. Can you resend the email to my other address, doctor@iknowindices.com, i-knowindices.com? I think I'll be able to immediately reply to that. Oh, my mobile number. My mobile number, I'll just type it down here. Because I do not want to use this forum for any business activity. An Australian dollar seems to test low 0.72 before trend reversal. Yeah, it is trying to consolidate here because they wanted to gain first the levels in the case of euro and GBP, and later on rise in the case of Australian dollar, because they are handling the commodity crosses. Afterwards, they will come to the big moves in the case of Aussie as well, in Hassan. Can you give your reading on gold and the levels? Yeah, gold is, now they are trying to do a lower level consolidation with the extended downward stoppings. So it is likely to jump up. So you could come across after this month end, they could make a big upward move in the case of gold. Because month end, they will try to hit all the lower level stops. Entitling. How is GBP today? As you see that GBP is likely to gain more levels when compared to euro today. Then Shellan. How many pips spread again, sir, to observe before entering a trade at commodity price? So in the case of majors, the four majors and two commodity pairs, the spread between the high and the low should be more than 40 pips. Sometimes they give the wrong quotes like this. So you try to refer to 2-3 your platform quote high and the low, and also in one or two quote pages, because once many of the traders started using the live market quote page, they try to play all tricks. And wherever you come across a live market quote page, they see that you don't read that properly. That is how they give the wrong information, like a wrong high, wrong cold. Sometimes they change the timings. They're trying all the tricks of seeing that the people don't use the live market quote page as an effective tool and the only tool. But we have to outsmart such stupid fellows because they can't think beyond that. Okay, no more questions. Yeah, I'll give my contact. Okay, now I have given the email. and also the phone numbers for the benefit of those who wanted to contact. But actually, small traders, I do not want them to struggle or trouble themselves, and that is why I'm giving the forecast free here, and also try to see that you are able to develop your own trading system and then try to earn money from the market. The secret behind it is very simple. Take very less positions consistently, you will be able to make money from the market. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar and you people for the kind presence. See you on Thursday. I will review the forecast on 6th of August and how exactly, sorry, not 6th of August, before that, that is 30th of July, sorry. Coming Thursday, I'll review the forecast and also try to give you how exactly the market is expected to make for the moves. Thank you all and all. See you by Thursday and wish you all happy trading.